Good morning once again, folks. The SGX Nifty is indicating a good start today. It's a 90-point bump up, actually. So, in that context, the bulls have it this morning. Whether they hold on to it or not, time will tell, because it has been a volatile last few days. But our entire research team is here to help you prep for the day and tell you about all the stocks that you can keep on your radar this morning. So, let's welcome them on board. Hi, folks. Morning. What are you looking at, Nigel?
Well, Tata Steel first up. Tata Steel and the numbers look disappointing. Everyone's worrying why they reported net loss. Well, that's the least important of all their numbers. The net loss was because of a tax adjustment. And that was because, in fact, they have an ongoing British pension scheme that they're trying to arrange out there. So don't look at that, but look at the operational performance. And that itself was quite disappointing. It missed our estimates by close to around 20% odd. And we look at two numbers for Tata Steel. One is the India EBITDA per ton. That missed our estimates. It improved by around 1,600 rupees per ton on a sequential basis, but it still fell short of our estimates, which were closer to around 12,000 rupees. On the Europe EBITDA per ton, we were working with a loss. Well, the loss came in worse than expected. Couple of factors played out here. One is realizations were weak. In Europe, particularly, some of those contracts got reset. And because of that, realization pressure continued. For the India business, the reason of the improvement was the coking coal cost. Well, they cooled off, and that's what could have helped them to some degree, along with operational leverage. Southeast Asia has been struggling. It continues to struggle. And now the problem is the debt is stagnant at around that 71,000 crores odd. So I'll be speaking to the management later today. Let's see whether or not we can get some clarity about how Q4 is shaping up. But for starters, that one opens up in the red. Let's go across to Vivek. Though, Vivek, you're tracking Adani transmission. How are those numbers?
Well, good morning. Adani Transmission declared its results yesterday in the dying minutes of trade. It's been a good set as far as if you're only looking at the numbers. Revenues up almost 22% on a year-on-year basis. EBITDA up almost 64%. Margins, expanding almost 1,000 basis points, coming in close to the 41.6% mark. And profitability higher by 78%. However, a couple of things to keep in mind. The transmission business did quite well on the back of higher availability. However, the distribution business was impacted by higher coal and power purchase prices. However, the company managed to offset that by fuel adjustment charges recovery as far as the monthly billing is concerned. Just having a look at the stock internals, since Jan 24th, there have been two circuit filter revisions, first from 20% to 10% and yesterday from 10% to 5%. And the stock has been hitting the lower circuit of 10% for 3 consecutive trading sessions. And since Jan 24th, the stock is down over 50%.
Okay, all right. Thanks a lot for that, Vivek. Well, let's talk about Hindalco then. And Novelis came out with its set of numbers, which is bulk of their profitability. And those numbers as well were disappointing. We were bracing for a weak set of numbers, but they were weaker than expected. On the top line, there was a bit of a dip because shipments were lower out there, telling you the demand was a little bit soft, and also you had destocking that took place out there. In terms of the EBITDA number, well, the EBITDA trend should come up for you. It was down by close to around 33% on a year-on-year basis, came in at around 341 million odd. There was no operating leverage because volumes were lower. Second factor is the spreads. Well, they didn't work in their favor. And the third factor is that, in fact, the high energy cost is something that have hurt them. And that's why the EBITDA per ton, the street was saying there'll be a compression, but they didn't think it'll come in at $376 per ton, which is precisely what's happened. The management says in Q4, it recovers to say around $400 per ton. And in the second half of next fiscal, it goes to $525 per ton. But this number was disappointing. For the next quarter as well, expect some sluggishness. And on the debt front, it's gone up by $100 million. So disappointing set of numbers coming in from Novelis, and Hindalco as well will pull back a little bit. But on both these two, Sonia, Tata Steel as well as Hindalco, both of them, they've gone into these numbers under pressure. So let's see how much of the bad news is already in the price. But what about Apollo Tyres? Good news there.
I'm going with green over there because, the commentary from the management was pretty good, actually. 9 out of 10 for their commentary. They did mention that the OEM demand, that's coming in, from both passenger car radials and truck and bus radials is very strong. Only the export demand continues to be under pressure because of what's happening in Europe, as we told you earlier. The management has said that in Europe, the demand outlook could remain challenging in the first half of the new calendar year. In India, though, the management expects the input costs to correct further by mid-single digits in Q4. Now, two very positive things. One is that the company has lowered its capex guidance. Now they will spend only 700 crores for India, which is 75% of the earlier guidance. Now, why this is important is because it's in line with the stated intent to focus on the ROC improvement and the free cash flow generation. So they've brought down their guidance so that they can, improve their return on cash as well as their free cash flow generation. Return on capital employed and free cash flow generation. Apart from that, the company has also reduced their consolidated debt So the debt has gone down to 4,800 crores in Q3 from 5,500 crores last quarter, and this is because of an improved performance as well as a reduction in working capital. So a reduction in debt and as well as lowering of its capex guidance to meet its return ratios is something that the street could take positively today. The stock in any case has had a fairly smooth run. It's up almost 20% in the last 3 months. But let's go across to Abhishek. He's tracking LIC Housing and Muthoot Finance. Abhishek, over to you.
Well, as I had suggested in FinStreet, we are seeing customers moving away from gold financiers to banks, and that is hurting all the gold financiers as well. Muthoot Finance, on the other hand, this time around has performed better than Manappuram. Muthoot gold loan portfolio growth is of about 4.8% YOY and about 0.6% sequentially. However, on the other side, Manappuram's gold financing business saw an AUM decline of nearly 9% YOY and about 3% quarter on quarter. So the AUM growth has picked up from around 3.5% in the previous quarter to right now about 5.6% on a YOY basis. The net interest margin has also improved by 85 basis points, which suggests that they went in for P&L this time around. So they have concentrated on the yield, on the net interest margin and give up on growth. Gross NPA ratio, that has deteriorated. It is now 2.6% versus 1.7% in the previous quarter. The P&L, both the NI and PAT is above our poll. LIC Housing Finance, that's a weak set of numbers, and it's a surprising front given the fact that all the other HFCs are really performing well. So they have seen disbursals decline both YOY and quarter on quarter, YOY by around 9.5% and sequentially more than 4%. The individual disbursals, that's down more than 10% YOY and about 4.3% quarter on quarter. The AUM growth has been tepid at around 2.3% quarter on quarter. The net interest margin has improved sequentially to 2.42 versus 1.8% in the previous quarter. They have seen elevated provisions this time around, which is up 104% quarter on quarter. So the ECL provision, that's up about 15.5% quarter on quarter, leading to asset quality remaining stable or improving sequentially. So PNL in terms of NI, it's a beat on our poll. However, the PAT is below our poll. Back to you.
All right, Abhishek, thanks very much for that. We, of course, have a few of those managements with us over the next 2.5 odd hours as well. Now, JK Paper, Balaji Amines, VMart, SJVN are the other names which reported. Sonal is here with quick updates. Sonal, hi.
Good morning, Prashant. Let me start with Balaji Amines. The management had told us earlier that yes, there are some demand concerns in the pharmaceutical segment, and Q3 numbers on the back of that will be weaker. So this time around, revenues are up 4%, but EBITDA is down 18%. Margins have declined by around 600 basis points, leading to a profit decline of 17.5%. Majority of it has come in their standalone entity. The company has said now on smooth accessibility of raw materials, they expect to increase capacity utilization of their legacy products, but that will happen in FY24. VMart, another weak set. While revenues were up 12.5% on a YOY basis, EBITDA declined 13.5%. We have margins which declined by 600 basis points, leading to a profit decline of 65%. If we look at the internals, the same store sales growth, that's up 1%, footfalls are up 13%, but conversion is down 9%, and 36 crore rupees of expenses, they have gone in the Lime Road business integration as well. JK Paper, strong set of numbers, revenue growth of 60%, EBITDA is up 125%, margins are up almost 1,000 basis points, and profits are up 121%. That should be in the green in trade today. SGVN reported overall a muted quarter. Hydropower generation is down YOY, and that's why we've seen a revenue growth of 0.5%, but EBITDA is down 0.7%. Margins have declined. Net profit is down 22. Net profit is up 22%, but hydropower generated units which were lower on a YOY basis. So going with red as far as SGVN is concerned.
Okay, thanks a lot for that. That is a handful of stocks that we're looking at. Here's a quick recap in case you missed out on any. Stocks with positive news flow this morning. There's Adani Transmission, Apollo Tyres, Muthoot Finance and JK Paper. While stocks with negative news flow, there's Tata Steel, Hindalco, LIC Housing, Balaji Amines, VMart Retail and SJVN. But all eyes will be on what's happening across the globe. Brent crude is now around $82 a barrel. It has risen about 1% It was a choppy last few days. China demand hopes are coming back. So Manisha Gupta is here to tell us all that's been happening there so far. Manisha, good morning.
Sonia, morning. Thank you so much for that. Well, yes, some recovery coming in for the crude oil prices, as IEA says, and tells us to CNBC-TV18 also that there is an anticipation of strong Chinese demand going forward. Also, they see tighter energy markets in the second half of this year. Also, the Turkey earthquake has led to some terminals suspending operations, and that's adding premium to prices too. But not just crude, the rubber prices also have rebounded quite smartly. You know, in October, we were trading at 115 cents a kg, which is now risen to 140 cents a kg, which is a near 5-month highs for rubber as well. The only sector that still continues to languish is the metal prices. Aluminum is off with 7-month highs. Copper is trading at a 4-week lows as well. And we've seen zinc prices come off its 5-month highs too. There has been some increase in inventories, the strength in US dollar, and a very overdue profit-taking finally seen in the sector.
All right, Manisha, thanks very much for that. That's commodities in focus. We'll take a very quick break here. Vinity Saraf Muthreja, Managing Director of Vinity Organics, will be joining in for a quick discussion on the third quarter results that follow. That conversation coming up in just a bit.